let's talk about the survey, which is based on India and Indians' retirement. So here I'm talking about Max Life Insurance in partnership with KANTAR actually launched the second edition of the India Retirement Index study. That's what we're talking about now, where almost 3,220 respondents were surveyed across 28 cities, comprising of almost 6 metros here. So let's find out the findings. Let's figure out and know the findings of this particular survey. And for this, with me now is Max Life Insurance MD CEO Prashant Tripathy. Prashant, good evening. Welcome to the show. And let's start with the highlights of this particular survey that you've done. Tell us something. What are the headlines that are coming out of this survey?
What we are saying is that, and I'll take maybe 3-4 minutes to summarize this. When we ask people about how positive they're about retirement, 70% of the Indians are saying they feel positive about it. And about 1 in 3 are saying that money is more important when they think about retirement. However, about 60% people feel that health and well-being related to health is more important. So that's at a summary level. As we start to dig deeper to find how people are prepared, this is one thing that we've created. The retirement index that we've created is a combination of 3 different parameters: preparedness on the basis of financial well-being, preparedness on the wealth of strength of health, and preparedness on the basis of emotional well-being. So these are broken into 3 components, and we've gone asking questions around all 3 of them. So firstly, on financial, 1 in 3 people said that they will exhaust all their savings in the first 5 years of their retirement only, which means very, very few people, less than 20% people said that they have enough money to lead a good retired life. And 86% of people are regretting that they didn't start saving on time, which means a large majority actually believes that they should start to save much earlier. 37% people haven't made any attempt to save so far, and 23% people don't even know where to begin. So the summary at a financial level is that very few people have saved enough. And while people believe that they should start much earlier, we don't see that happen in the real situation. That's on financial. On health, people do have this view that 4 out of 5 people, 80% people are saying that they believe that they will be healthy when they retire. However, when we ask the question, 2 questions. One is, are you regularly exercising? Only 40% people are regularly exercising. And only 55% people have been doing some kind of regular check or blood check or whatever over last 3-year period. So, and not enough focus to look after the health. However, people have this notion that they will still be healthy when they retire. That's the health quotient. And then the third one is emotional. 90%, 96% people actually believe that they will live with their children to derive emotional comfort. 1 in 4 actually say that their retirement may be very lonely. However, 60% people currently don't live with their parents. So really, across all the 3 parameters, financial, health, and emotional, people have one view, but they are doing something else. And they're far away from being really prepared to face or to embrace retirement solutions. So our retirement quotient hence is at 44, which is flat over last year. That is the summary.
Also, Prashant, Indians are conservative and savers. Survey findings are definitely very surprising, but then this also shows, like one of the findings states that 59% of respondents lost their money in first 10 years of retirement. Is this what we're talking about?
One thing came out very clearly, that both in awareness as well as with respect to investment and ownership, life insurance figures the first. Close to about 69% people believed that life insurance is number 1 instrument to plan for retirement, and the ownership is over 40%. That's the highest. But in addition to that, people have been also making investments in health insurance, predominantly because lack of health insurance can eat into life savings. So people are aware, and the awareness actually has gone up quite sharply for the health insurance. uh, the term deposits, continue to remain quite famous. So people quite popular. So people do save a lot in fixed deposit, and so on and so forth. I think we have also noticed that the popularity of the real assets, which means gold, property, etc., has been going down. But when we look at the actual ownership, we haven't seen significant movement in ownership versus last year. The ownership of life insurance is continues to be little over 40%. We haven't seen tons of movement in health insurance ownership. Fixed deposit is also flat. So ownership is going up. The awareness is going up. Ownership is reasonably stable, and in a way, it's a good news because awareness actually drives ownership. So I'm very hopeful that as people become more and more aware, the ownership will go up, and people will plan more and invest more towards their goals of retirement.
Let's talk about millennials. Any specific finding as to how millennials plan for their retirement?
Many people have said that the best time to start for saving less than 35. There is high level awareness amongst everybody that millennials, as soon as they start their first job, and we have found that about 44% of the respondents have said that retirement planning or retirement saving should be started along with other plans, or after all the plans are over. It should be done right upfront, which means as soon as people start to work. So there is a higher movement towards starting to save earlier, is one finding that I'll say. More and more people are aware of it. Uh, we don't have any data to suggest that millennials are planning more aggressively to start with. I think that's one suggestion that we'll carry, and we will give more focus to understand the actions and behaviors of millennials in our next survey.
One thing I want to understand is what kind of retirement instrument people are trusting their money with at a different age. How many of them are comfortable having equity in their portfolio? Has something come up on these lines in the survey?
So, Kavita, like you meet with many people, and everybody says that we will like to continue to work and remain engaged in something. An equally large set is the kind of millennials you meet with, and they will say, "Oh, I don't want to work beyond 45. I want to retire at 50 and enjoy my life." Now, the point that I'm trying to make is, if people decide to retire at the age of 50, and if the life expectancy at that point or for that segment is 80 years, what they miss it, they still need to have uh, some backup plans from the age 50 to 80, which is 30 years. And with inflation being there, I think it's millennials who need to worry about their retirement and how they will manage their retirement perhaps the most, compared to somebody who is like 65 years of age and life is more predictable for him. The level of unpredictability is significantly high for millennials. So my view is that they may not worry about it right now, but I think they must worry about it. That's my view as as the CEO of life insurance company. I don't have specific data to tell you where millennials are investing, because we pretty much went and captured data for people starting from 35 years to 65 years of age. So I can only share that the ownership pattern is number one, life insurance, number two, fixed deposit, and number three, health insurance, followed by mutual fund, and then so on and so forth, real estate, gold, etc., etc. So the large four or five are life insurance, fixed deposit, mutual funds, and health insurance.
Prashant, one thing I want to know now, worrying aspect of finding was dependency on family and children. Now, a fundamental flaw in retirement, we can also say that. Why is this a barrier still?
I think the answer is not financial. Actually, the answer is social. And Kavita, and the way I will describe that is the kind of bond, the values that Indians at large carry is, uh, I am the person who has to look after other people first, and then I'll look after myself, which means to me, my family is most important. I will think about myself later. And it is quite obvious, survey after survey, we have found that people in India like to, do everything possible for their children, their families, etc. And then they will think about themselves. Now, retirement in that context is something which is more personal. It is about the individual, as to how the individual will lead his life. By the time people start to think about themselves after having done everything about their family, is either too late or they don't have too much money. And the additional part about India is our lives are completely centered around our family. So, we don't have like parallel passions that we pursue. We derive a lot of comfort, a lot of pleasure, a lot of happiness out of our family. So I'm not surprised that people are saying that when I will need money or emotional well-being, etc., I will stay with my children or I will count on my loved ones. It is quite obvious. And the other one that you very rightfully mentioned, that people are not able to spend early on or spend enough on their retirements, is because uh, they are they are doing, or they are fulfilling the needs of their children or their immediate family. So those are reasons that I feel, and because it is social, it will take very long for this needle to move. It is quite obvious, in your family, Kavita, in your extended family, you will notice this happen over and over again.
So clearly, a lot needs to be done in terms of retirement planning. Thank you so much, Prashant, for sharing the highlights of the survey.